gang, this is Dave at Systematic Investors Group. It is August the 2nd, 2022. And the question is it time to get back in the market? So I've been on holidays for the last several weeks, and I was meaning to put out a video talking about this potential bottoming pattern and, is this a bottom in the market? Now, the question is, we're taking a look at the SPY on the daily chart here. And the question is this a bottom in the market? Is it time to start getting back in the market to trade strategies? Now, if we just look at the SPY itself, you can see we hit a low at about, I think it's about 362.17. We had a high of 479.98. So that represents about a 24.5% decline in the S&P 500. And over the course of about, since the beginning of January of this year, so you've got about, 6 or 7 months now of decline. So that's pretty significant. I mean, it's not more significant than some of the other quote unquote bear markets that we've had in the past. However, it is pretty significant. And, what has kind of sparked my interest in this right now is, the question, are we at a potential bottom? So I'm going to answer this in the context of where we are today. If you look at the decline we had, I think it was one of the worst beginnings of the year in the last 100 years, I think they're saying. I don't have any way to quantify that. It's just something that I've heard in the media and from other traders. Now, having said that, this does look like a pretty constructive bottoming pattern. And if you look at, the break of this level and the retest of that level right there in the SPY, you can see this is the kind of pattern that you want to see in order to determine if that's a short-term bottom. Now, there's a lot of things going on in the world which makes this very confusing. And because there's so many things going on in the world, with interest rates going higher, with conflicts, coming out of the COVID crisis, supply chain interruptions, there's just, it's just a crazy time in the world right now. And because of that, at least I do, I have the mentality that, maybe the worst is still yet to come. And that's just my personal kind of bias, or, maybe you could call it my personal fear that things might get worse and that this might just be a bounce similar to this bounce. This looked like a fairly constructive bottom, and then we just, puked over the next couple of months. So we could be in the same situation here. It's always very difficult to call a bottom, and we can only work with, basically what we have in front of us. So one of the things I do know is, this chart pattern is definitely a short-term bottom. Now, the challenge with this is it's a short-term bottom, and it looks like we've broken above the immediate, structural resistance, where we've shifted from lower highs and lower lows to a higher high and a higher low. I always mix those words up. But basically, we were stair-stepping down like this, and now we've put in a stair-step higher, right? And that's the kind of constructive action you want to see coming out of any sort of bottoming pattern or any kind of low and going into a more constructive uptrend. Now, the MACD signaled early here when it was below its zero line, and now it's above its zero line. And so we are definitely not in a short-term downtrend for the time being. The squeeze indicator actually fired off a long squeeze, and we're pretty long into this squeeze. We're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, around 10 days. Now, squeezes usually last, I believe, 10 to 12 days. So we could see a pullback from here, and, that would be pretty normal because we've had a nice little move to the high side. We're also heading into obvious resistance levels, right? You've got this low, this low, this low. We broke that resistance. or that support rather, it was support on this side of the chart. And then we came back up and we tested that, which that broken support, which now became resistance. And then you can see we sold off from there, and now we're right back up to that level. We've got some key moving averages as well converging on that level. So it's a very difficult, obviously a very difficult decision to make whether to get back in the market or not. So this is the SPY. Let's take a look at the ES futures, the E-mini S&P 500 index futures, which give us a little bit of a different story. You can see here, obviously, this is the chart I used to analyze the market, and I've drawn a lot of lines on here. It looks pretty messy, but you've got the same situation here. Obviously, you had a longer squeeze. You had some negative divergences. I think I actually put a little video here and asked if, just to discuss if we were at a potential bottom here, and we definitely were at a short-term bottom. And I believe in that video I said once we get back up to this level, we've got to see what's going to happen there. And obviously I didn't follow up on that, but obviously we consolidated at this level I thought we would test, and then we sold off. Now coming into this video, we're back up at that level. We're back up at resistance. Things are starting to look constructive on the chart, but everything above us is overhead resistance. I mean, even if we get through these key moving averages, we have this downtrend, major downtrend line of resistance above us, which converges somewhere around 4,300, just over 4,300 in the S&P futures chart, the ES futures chart. So if we look at it from this perspective, it definitely looks both constructive and not so constructive in terms of the overhead resistance. Now, the reason why I'm actually putting this video out today is because I'm actually getting back in the market. I had some signals yesterday and some signals today. This is not my production account, but with my systematic trading. So there are a couple of systems here that I do trade. Actually, it's only this system I do trade in my production account. So you can see here in the portfolio, there's a couple of symbols that are starting to, come through. I think I actually have maybe one more position in my production account, which is on a separate computer. But you can see here, we've started to generate some signals here. You can see here there was this signal here today in Vivo. Some of the other strategies are starting to get more buy signals. This is the beta squeeze squeeze pause sprint for the Russell 3000. You can see here we've got like 5 buy signals. So the reason I'm putting this video out is because I'm kind of looking at the technical landscape in the market, which is at least a short-term bottoming pattern, but heading into resistance, and looking at our strategies, and our strategies are starting to develop buy signals again. Now, having said that, it's not impossible for our strategies to develop some buy signals for a couple of days, and if the market rolls over, then essentially, we're in the market with a couple of positions, and then the market could, it could drift lower and break these lows around 36.39 in the S&P futures. Now, if that happens, obviously, the strategies will they'll stop generating signals again, and it will just be kind of like similar to a false breakout. And this does happen from time to time, right? Because trading strategies are not perfect. But having said that, as a systematic trader, you need to decide, are you going to go with your strategies? Are you going to go with the signals that are generated? This could be a good place to either short the market, or it could be a good place to actually get back in the market. And if you wait and you don't take the opportunity to follow your strategies, you may miss out on a big run back up, at least to the highs, and possibly to new highs. So it's, So I guess what I'm saying in a nutshell, and I hope this isn't confusing, because it's hard to gauge what you're saying in the middle of a video, but I guess what I'm saying is we're at a major inflection point in the market. We have some short-term bottoming taking place. Our strategies are firing off, starting to fire off some buy signals, which I am actually taking and getting back in the market. The risk is that we've entered into an area where it's a perfect area to short and the market's going lower, or we've entered into an area of inflection where the market is going to start moving higher, even though there's obvious resistance points and economic headwinds above us. Now, a lot of economic headwinds, if you look back in history, you look back on charts, sometimes the market turns around when the worst news is already out. So, everything's kind of been priced in, everything's been factored in, and the market will look forward several months ahead of the actual economy shifting directions. I mean, let's not kid ourselves. It looks really negative out there. So I can only, I can't predict the future, but what I can do is look at the historical performance of our trading strategies and say, well, there's a probability that that the strategies will start performing again. They'll come out of the drawdowns that they've been in, and we're ready to start into a new phase of market activity. If we don't get above this level and we start to break these lows, then obviously it was too early to get back in the market, and the market could be in for some further downside. So, gang, I'm not making a recommendation either way. Just letting you know that the strategies are generating some signals. I'm taking those signals for what they're worth today, and I'll be taking them if we sell off and the market turns around again in the future. So the only thing we can do is timestamp this. It's sorry, not April. It's August the 2nd, 2022. Let's see what happens, and we'll check back in for an update at some point in the near future. So good systematic trading. I hope your summer, at least in North America, is going well. I'm on staggered vacations over the next several weeks, trying to absorb as much sun and energy and good vibes in Canada as we can before the cold winter hits. So good systematic trading. Have a safe summer, and we'll look forward to seeing you at the next update. Bye for now.